Hey everyone, welcome to Lunar Beaches Crypto, where we ride the waves of the market all the way to the moon. Hope you are doing well. In today's video, we're going to be going over trading rules and how to create your own. Every great trader has their own set of rules, and if you're not using your own set of rules, you're just gambling, you're not trading. So today, let's go ahead and build a rock solid trading rule book that fits your style. All right, so let's go. Let's get into it. Step one is to define your trading style. You need to define your trading style. Are you a day trader? Are you a swing trader? Or are you like a long-term investor? Because depending on which one of these you are, maybe it's all of them. That defines your rules. So for intraday trades like your scalps, you're going to have a set of rules. For your swing trades, you're going to have a different set of rules. For your investing, you're going to have another set of rules. So we'll go over that today. So day traders, just for those that don't know, that are new to trading, day traders, I consider myself more of a day trader. I do things, I work better during certain times of a market session, and I like to jump in and out of trades. That's when I personally do better. Swing trading, I'm okay at. Investing is pretty easy. It's just investing, right? So, but when it comes to your intraday trades, those are fast moves. You're looking to get in and out of the market. You're not looking to hold a position for long. Swing trading, you're holding for days to weeks, and your long-term position trading or investing, uh, um, that's you're holding for a long time, right? So, but your rules should match how you trade or how you decide what trade you're going to do. Whatever trade you're going to do, you should follow the set of rules. If it's an investment, then you are looking long term. You should be on like higher time frames, like the daily and the weekly, even the monthly. If you are swing trading, then you're looking at like the daily 4 hour, 15 minute to get into the swing trade. Usually 4 hours, probably best for swing trades. And then for your intraday trades, you're dropping down to the 1 hour, the 15, the 5, sometimes even the 1 minute, depending on your style. So if you don't like to hold on to trades for long, then intraday trading might be best for you. It really all depends on whether or not, well, in my experience, if you have a day job, it is much more difficult to do intraday trading because you can't watch the charts all day. So swing trading might best fit you. Set an alert for certain levels, support resistance, and then execute a trade based on your rules. And with every set of rules, you gotta have entry and exit rules. So we've got to set a clear entry and exit criteria so you're never guessing, okay? So answer these questions. What triggers your entry? Is it a moving average crossover, support bounce, RSI oversold, all of those combined? Probably. Where do you place your stop loss? Is it going to be a fixed percentage, like a fixed RR? Are you looking for a 2-to-1, 3-to-1? Is it ATR, swing highs and lows, all that good stuff? Where are you going to put your stop losses? And then you've got to go with what's your profit-taking strategy? Your profit-taking strategy can be either a fixed take profit, like a 2-to-1, like I'm only going to risk, I'm only going to do a 2-to-1 trade. So I'm going to risk $50 to make $25 while only risking $12.50. I think that makes sense. Or you can use a trailing stop loss, or you can use like Fibonacci extensions. Every time the level comes up to a certain Fibonacci extension or retracement level, then that could be your exit. So it's all about building out your own plan, and really what you have to do is backtest your plan. Piggybacking off of my video that I posted yesterday, the reconfirmation and trading psychology videos, I would say that when you enter the trade, you want to make sure you have your stop loss set and ready to go. Already have it ready. Have your stop loss and your targets ready before you even enter the trade. That's probably the best way to go about it for most traders, and really any trader. Have your set targets and then just let them go. Now, I do prefer to take profits at at highs that are over to the left, significant swing highs. And I also like to take profits on a fixed rate, or if price is entering some kind of liquidity pool, like a fair value gap or an order block. Or stacked orders in the order book. So there's different ways to go about it, and you just have to find what fits you the best. I don't even know if it's even worth me going to the charts to fully explain this, or to explain this whole thing, but because it's not really, I don't think it's really conducive to you figuring out your own rules. There's plenty of videos out there that you can find that have different trading strategies. You could just YouTube, 5-minute trading strategy, 15-minute trading strategy, swing trade strategy. And if you find something that kind of fits you or makes sense to you, and I will post different videos, going over this stuff as well. And hey, if it works for you, then it works for you. And that's all that you can ask for. So you just have to find your rules and figure them out. Risk management is going to be a part of your rules as well. You got to protect your capital. That's the main thing. So one of my biggest things is cut losers early. Don't add to losing positions, and let winners run. So if a winner is running, hey, let it run and take profits along the way, and move your stop loss at least to break even once you've broken a significant high. That way, you at the very least, break even on the trade and don't lose capital. You have your capital saved for another trade. So you can set a risk limit per trade, like a 1 to 2%. Personally, I like to use 1%. Max risk per trade. And you have to define your max daily or weekly losses before you stop trading. So if you take like 3 losses in a row, you've got to be like, all right, like in a day, if you're scalping, you take 3 losses in a row, probably best to just stop trading for the day and then just wait for the next day. Kind of regather yourself and just be like, all right, that was just an off day. We'll try again tomorrow. And if you only risk 1% of your account per trade, then those 3 trades aren't really going to hurt you in the long run. But the winners, those are the ones that should way outperform the 1% losses. So you should be making more than the 1% in your gains when you're trading. So, and never risk more than you're willing to lose or that you're comfortable with losing. it's risk tolerance is everything, and don't revenge trade. Like if you get caught, like I said, if you do lose 3 times in a day, just cut it out. Just stop trading for the day. Cut your loss or take your losses and just move on. Don't revenge trade. That is how you get wrecked, and it's the easiest way to get wrecked in the market. So it's just best not to do that. So your position sizing does matter. It should be based on your risk tolerance and your stop loss distance. So smaller stops equals larger positions, wider stops equals smaller positions, and use a position size calculator. Don't just wing it. We want to make sure that we are using using effective and proper risk management. And market conditions and adaptability, we've got to be able to, not all conditions are equal. We got to be able to identify what works best for our systems. So trend following, avoid choppy markets. So if you're better at trading trends, just wait for the chop to stop and let the trend begin. I just created a new slogan, a new catchphrase. Wait for the chop to stop and let the trend begin, all right, before you decide to go in. So if you're a range trader, don't chase the breakouts. So you can get what's called a swing failure pattern, where you get a fake breakout above a high or below a low, and price reverses back in the opposite direction. Typically with this, you're looking for a break above the high on low volume or even high volume. Actually, I would prefer a spike in high volume, but then you get immediate rejection back into the previous range. Usually it comes with a long wick at the top or the bottom, depending on which way the market's moving and which way the range is broken. So if you get a big pop up, but you come back down into a range, that was probably just a liquidity grab, and it's a swing failure pattern, and now we're just looking for a bearish trade. So there's that. There's volatility. Do you love the volatility? Some people like to trade news events, but be clear on when to sit out. So a cash position is a position too. Typically, you would kind of want to sit out. I mean, unless the trade is just like the setup is there, all your rules are being met, then I mean, you can take the chance if you want. I consider trading on news to be more of a gamble. Usually, you want to let the dust settle before you consider taking a trade off of news events. We like the volatility as traders, intraday traders especially, but that volatility can also get you wrecked. So just be smart and let the market show its hand, okay? Follow your rules and you'll be okay. And emotional control and discipline, this is, your biggest enemy in trading is going to be your emotions. You don't want to FOMO in or out of a position. You just want to create a pre-trade checklist to avoid impulsive trades. Stick to your rules, not your feelings. Don't let your feelings dictate how you trade. Just stick to your rules. It's really hard to tell you what rules that you should be following or you should create for yourself. The whole reason that I did this, that I'm recording this video, is because I was asked to create a video about how do you define your own rules. And really and here's the tough truth. You've got to put in the work. You've got to set up a chart, give yourself 3, 4, maybe 5 indicators. 5 is probably max. And you just want to make sure that your rules follow those indicators. So like with the example given yesterday, we had a moving average, 100 simple moving average. Doesn't really matter the time frame on that one. The time frame just determines how long you're going to be in the trade. We can have a moving average, some type of momentum oscillator like an RSI or a MACD. Some type of momentum oscillator tends to be in everybody's repertoire if they're trading with indicators. And then, look for divergences. You can also find indicators that show you different liquidity pools or fair value gaps or whatever it is. All that you need to know is that I have these rules. I'm going to, and then once you figure out a set of rules, let's just say you find one setup in the market, okay? And it hits all of your rules, okay? And it plays out. Let's just say you're just looking at the chart and you just throw it on the chart. All right, it hit all the rules and it played out this one time. What you're then going to do, and this is the part of trading that I say, this is where most people probably fail, is because they don't realize the work that it takes to put in to become a profitable trader. You have to backtest. You have to go back and backtest your system, your rules. I can't tell you what rules that you should follow. If you watch my streams or if you watch any of my future videos where I will go over different types of strategies, you can try and pick off from those if you would like, but you have to find the rules that fit you and your style. Every trader is different. We all do follow a lot of the same things, but at the same time, how we trade is a little bit different because everybody's risk tolerance is different. A lot of people have deeper pockets than others. A lot of people have less patience than others, although you should be a lot more patient in your trading. As my friend Alex O Crypto says, a patient trader is a profitable trader. Let the market provide you your signals, your rules that you follow, and you follow those rules and you just stick to them. But like I said, you've got to do the work and doing the back testing, test it 100 times at least. And if you have a set of rules, you can actually go to ChatGPT or Grok or any kind of AI thing, type in your rules, tell it your rules, prompt it your rules, say, hey, these are my rules for a trade on the 15-minute chart. Back test it on the Bitcoin chart for the last, or for like 100 trades that the rules were hit. Back test it for me and see what it says. The thing is, if your risk management is proper, you're only risking 1 to 2% per trade, then you could literally have a 20% win rate and still be profitable. But your wins have to greatly outweigh your losses. So if you're risking just 1%, you're probably going to be wanting, like on a lower win rate strategy, you're going to be wanting to make, 5 times that. Do you 5%, 6%, 7%, 8%, 10%, whatever it is, but it needs to be a bit more than that 1% in risk. And yeah, so make sure you track your trades in a journal too. It helps. I promise you it helps. Having a trading journal helps. And not just putting in, don't just put in, okay, I entered this trade for this reason, this reason, this reason. Also kind of write something out, like make a note of potentially if something that was happening that day. Was there a news event that day? How did that news event make you feel? What was the sentiment of the market like at that time? These things can help benefit you in your future trading to help you understand what's going on in the market, what's really happening right now. Market sentiment is really down, but for some reason it looks like we're reversing. Well, in the past, when market sentiment was really down, that typically marked a bottom. What else was happening at that time in the past? Maybe there was some really bad news that was happening. FTX collapse, for example. Or was it euphoric? Was Elon Musk going on Saturday Night Live getting ready to say Dogecoin to the moon? That could be a top signal. So that more helps your more position trading, your more investment long-term trades. But just writing stuff down and being aware of the market psychology, the sentiment, all of that will go a long way in your trading journey. So make sure you backtest, make sure you adjust your rules if you need to, depending on, your win rate on the backtest. I would prefer if you picked a 50% plus win rate strategy. I think it would greatly benefit you if you did, especially, but in the long term, as long as you are risking your losses, or as long as you are managing the risk properly of your losses, then I think you'll be just fine. But yeah, just having rules isn't enough. You have to follow them. And trading, you got to treat trading like a business. And your rule book is your edge in the market. So just make sure you put in the work. If you have any questions, it's much easier for me to help you in the Discord. In my Discord, I'm currently kind of reworking my Discord, so I don't have a link on that at the moment. But you can also find me in the Piper Academy Discord and in the Alexo Crypto Discords. So just go to the Piper Academy channel and the Alexo Crypto channel, subscribe to both of those channels, and find me on Markets After Dark on the Piper Academy, and just find me in the Alexo's Discord. Anyway, you can find me, follow me on X at Lunar Beaches. You could DM me on X too. I will answer. Okay. I want to help you to the best of my abilities. And, but yeah, that's going to be it for this video, guys. I hope this helps you in some kind of way. And, yeah, just let me know in the comments down below what you would like to see next. But that's going to be it for me. I'm Lunar Beaches Crypto. Thank you for joining me, and I hope you enjoyed this video. Like and subscribe, share it out, and until next time, ride the waves. Peace out.